Welcome to the Bull versus the Bear, where we dig into the two sides of the investment story for today's hottest stocks.
So, today, we're looking at Zscaler, a real revolutionary in cloud security. And man, this one presents a classic dilemma for investors. You've got this dominant force in a market that's absolutely booming. But on the flip side, it's got a sky-high price tag. And, well, it isn't actually profitable. So, which story is going to win out?
Okay, so here's how we're going to break it down. First, we'll get a handle on what Zscaler actually does. Then, we'll get into the bull case, all the reasons it could just keep soaring. After that, we'll hear from the bears, why it might stumble. We'll put them head-to-head, and then, you guessed it, the final call is up to you.
All right, first up, let's get to know our contender. What is Zscaler's role in the digital world? You know, the company is a massive player in what is really a fundamental shift in how we think about keeping our digital lives safe. Zscaler is a leader in this thing called Zero Trust. And you really have to get this concept. The old way of doing things was the castle and moat model. You build a big wall around your company's network. But with the cloud and everyone working from everywhere, there is no castle anymore. So Zero Trust flips the script. It assumes threats could be anywhere, inside or out, so it puts a secure checkpoint at every single digital door, for every user, every single time. No one gets a free pass.
And being a leader in such a critical field has earned Zscaler some serious scale. We're talking a market cap that hovers right around $49 billion. That is a huge valuation for a company that a lot of people see as defining the future of security.
So let's bring in the bulls for round one. How does all this build the case for them? Why are so many investors willing to bet that a company of this size can just keep on climbing?
Well, the bull argument really starts with one simple, powerful word: growth. Zscaler just posted a solid 21% jump in sales compared to last year, totally blowing past expectations and raking in $719 million in just one quarter. This is not a company that's hitting the brakes, it's gobbling up more and more of that enterprise cybersecurity budget.
And the bulls, they're not just looking in the rearview mirror, they're looking at what's coming next. As this quote from Wedbush analyst Dan Ives points out, Zscaler is planting its flag right at the forefront of the next huge wave, securing AI. Think about it. As companies rush to adopt artificial intelligence, they're creating a whole new universe of vulnerabilities. And Zscaler is planning to be the one to lock it down.
So this all leads to a crucial point for the bulls, the company's economic moat, which is just a fancy way of describing its competitive advantage. Zscaler's has two key parts. First, super high switching costs. Once a big company builds its security infrastructure around Zscaler, tearing it out is like trying to change the foundation of your house while you're still living in it. It's really, really hard. And second, you've got this powerful network effect. The platform handles over 250 billion requests every single day. The more data it sees, the smarter it gets at spotting threats. So an attack on one customer instantly helps protect every other customer. The whole network just keeps getting stronger.
Okay, but that's just one side of the coin, right? The top-line numbers look fantastic, but now it's time to hear the counter-argument. Let's bring in the bears, and trust me, they are raising some major red flags.
The bear case kicks off right here, with probably the most fundamental number for profitability, the price-to-earnings ratio. For Zscaler, this number, well, it's negative. And why is that? It's pretty simple. Despite all that amazing revenue growth, the company consistently loses money according to standard accounting principles.
And this table, man, this table really tells the story. First, just look at that PE ratio row. You see these profitable giants like Cisco and Palo Alto Networks with actual positive numbers. Zscaler, just a dash, because you can't have a PE ratio if you don't have earnings. Now slide your eyes down to the price-to-sales ratio. Investors are paying almost $17 for every single dollar of Zscaler's sales. That's a valuation just as rich as its competitor Palo Alto, and it completely dwarfs a titan like Cisco.
And it's not just the crazy valuation that has the bears worried. They're pointing to a few other things. First, while sales look great, the projections for actual earnings growth are starting to slow down from that explosive pace. Second, the competition is absolutely fierce. We're talking about giants like Palo Alto and Fortinet, not to mention the huge public cloud providers who are all eyeing this same pie. And finally, some investors get a little jittery when they see insiders, the people who know the company best, selling off millions of dollars worth of their own stock.
All right, time for the main event. We've heard from both sides of the ring. Let's put these competing stories into a direct showdown and see where the real battle lines are drawn.
So, in one corner, you've got the bull story.
This is a massive, unstoppable market trend. Companies have to move to the cloud, and they have to adopt zero trust. Zscaler is sitting in the perfect spot. But in the other corner, the bears are saying, hold on, even with this perfect setup, profit growth is slowing down. The big question is the best growth already in the rearview mirror?
Next up, the market battle. The bulls will tell you Zscaler is the clear leader, and its network effect creates a moat that just gets deeper and wider. But the bears? They're warning that a full-blown war is on the horizon. When you have giants like Palo Alto, Cisco, and the big cloud providers all gunning for the same customers, it could easily turn into a brutal fight over price, and that just squeezes Zscaler's ability to make a buck.
And finally, it all comes down to the financials. For the bulls, that 21% revenue growth is all the proof you need. The business model is clearly working. But for the bears, it's a simple, uncomfortable truth. The company doesn't actually make a profit, and investors are being asked to pay a massive premium for a business that's still losing money. So which one do you bet on?
Okay, we've laid out the evidence. You've got the compelling story of a game-changing technology on one side and the stark reality of a really demanding valuation on the other. Now it's your turn.
Now, for what it's worth, the professional analysts on Wall Street are overwhelmingly on the side of the bulls. Out of 40 analysts covering Zscaler, a whopping 31 of them rate it a buy or strong buy. That's a pretty strong consensus. But as we all know, a consensus on Wall Street is great until it isn't. It definitely doesn't make those very real risks the bears are highlighting just disappear.
So what's your take? Are you buying the growth story? Do you believe Zscaler is an unstoppable force that's going to dominate cybersecurity, making today's price look like a bargain down the road? Or are you listening to those valuation warnings? Do you see an immovable object, a stock so expensive that it's just bound to fall back to earth? Cast your vote, and hey, don't just drop bull or bear. Tell us why. Defend your take in the comments below.
Awesome. Thanks for sticking with us for this breakdown on the bull versus the bear. If you got something out of this analysis, do us a favor and hit that subscribe button. And be sure to check out our other videos where we get into the weeds on another big stock debate.